Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets behind those massive corporate reports. Today we are diving deep into Highwater Ethanol's latest 10K filing, and let me tell you, this one has some juicy details about how a company in the ethanol business navigates volatile markets. So, what is the big story here? Well, Highwater Ethanol is in the business of making fuel from corn, and like any business dealing with commodities, they are constantly playing the market game. We're going to break down their financial health, the risks they face, and what their strategies are. And if you like getting these kinds of detailed breakdowns without the corporate jargon, make sure you are subscribed. We also have a Discord community linked in the description where we discuss these filings further. So join us there. Alright, let's get right into it. This is Highwater Ethanol's annual report covering their fiscal year that ended on the 31st of October 2025. This is essentially their yearly checkup where they tell the world how they've been doing. Now, let's look at the numbers. In the year ending the 31st of October 2025, Highwater Ethanol brought in about $141 million in revenue. That is pretty close to the $141.8 million they made in 2024. It is not a huge jump, but it is stable. What is interesting is their gross profit, which is what is left after they pay for the raw materials they use. For 2025, their gross profit was about $9.6 million, a slight increase from the $9 million in 2024. This means they are getting a little bit better at managing the costs of things like corn and natural gas compared to what they can sell their products for. And the big number, net income for 2025, they ended up with a profit of over $16 million. That is a huge leap from the roughly $6.1 million they made in 2024. So even though revenues were flat, profitability jumped significantly. Let's dig into why. Looking at where the money comes from, ethanol sales are their bread and butter, making up about 76.8% of their revenue in 2025, which is up slightly from 74.1% in 2024. Distillers' grains, a co-product of ethanol production used for animal feed, brought in about 10% of revenue in 2025. Down from over 13% in 2024, corn oil sales, used for things like biodiesel, accounted for about 8.8% of revenue, a slight increase. Ethanol revenue itself saw a healthy increase of about 3.1%. They sold more gallons and the price per gallon also went up a little. This is good news because ethanol is their main product. They're producing at the maximum allowed by their air permit, which is about 70.2 million gallons per year. Now, distillers' grains revenue took a hit, dropping about 20%. Prices for distillers' grains were lower and they sold less of it. This is because prices for things like soybean meal, which competes with distillers' grains, went down. Corn oil revenue, on the other hand, saw a nice boost of about 9.8%, mainly driven by higher prices. This is partly due to increased demand from biodiesel producers. Let's talk costs. Their biggest expense is corn, followed by natural gas. For 2025, their total cost of goods sold actually went down by about 0.9%. This is a key reason why their net income shot up, even though their total revenue stayed about the same. They got their production costs under control. The price of corn per bushel actually went up a tiny bit, about 0.9%. But they used about the same amount of corn. So, while corn is more expensive, it looks like they managed to offset that by getting better yields or by using it more efficiently. Natural gas prices saw a small increase of about 3.4%, but they used about the same amount. This is crucial because natural gas is used to dry their distillers' grains, essentially making them last longer and easier to ship. Here is where things get really interesting. For 2025, their other income category exploded to over $11 million, up from just $1.4 million in 2024. The main reason for this massive jump is the recognition of $10.4 million in federal tax credits. This is thanks to a new law, the Inflation Reduction Act, which offers incentives for producing clean fuels. This tax credit significantly boosted their bottom line for the year. So, with stable revenues, slightly lower costs of goods sold, and a huge boost from tax credits, Highwater Ethanol reported a net income of over $16 million for 2025. That is a massive improvement over the $6.1 million they made in 2024, and a much needed comeback after a lower profit year in 2023, when they made about $16.7 million. Now, let's fast forward to their financial position at the end of the fiscal year, the 31st of October 2025. Their current assets, which are things they can easily turn into cash, went down to about $43.4 million from $52.9 million in 2024. This drop is mainly because they paid out a large cash distribution to their members. Their current liabilities, meaning what they owe in the short term, also decreased from 18.4 million in 2024 to about 11.6 million in 2025. This is largely due to changes in how they manage their payments for corn. And on the flip side, their members' equity, which is basically the owner's stake in the company, increased to about $77.9 million from $69.6 million in 2024. This increase reflects their strong profitability in 2025. Looking at their cash flow statements, we see that cash from operations was about $3.5 million in 2025, a big drop from $14.1 million in 2024. This is mostly because of how they manage their working capital, like inventory and payments. Investing activities used more cash in 2025, around $5.6 million, compared to about $5.5 million in 2024. This suggests they are investing more in things like equipment or improvements to their plant. Financing activities also used less cash, about $8.2 million in 2025 compared to over $16 million in 2024. This big difference is mainly because they paid out significantly less in distributions to their members in 2025 compared to 2024. So while they made more profit, they kept more of it in the company in 2025. Now, let's talk about risks. Highwater Ethanol is heavily exposed to fluctuations in commodity prices. Their success hinges on the spread between the price of corn and natural gas they buy and the price of ethanol and distillers' grains they sell. They use a lot of corn. About 18.7 million bushels are expected to be needed in the next year, and they've locked in prices for some of that. They also have about 230,000 millimeters BTUs of natural gas for the same period. Now, they did a sensitivity analysis, which is like a stress test for their finances. If ethanol prices drop by 10%, it could impact their income by over $11 million. If corn prices went up by 10%, it could cost them over $7 million. These are significant numbers showing how sensitive their business is to market swings. Their independent auditors, RSM US LLP, gave a clean opinion on their financial statements. That is always a good sign. They did mention that auditing the ethanol revenue related to index arrangement contracts was a critical audit matter because of the subjective judgments involved, which is understandable given how their marketing agreements work. Highwater Ethanol operates a 70.2 million gallon per year nameplate ethanol plant. They produce fuel ethanol and co-products, selling them mostly in the continental United States. Looking at their overall financial condition, their total assets grew to about $89.9 million in 2025 from $88.7 million in 2024. This growth is mainly due to an increase in their property and equipment, specifically plant and process equipment, which grew by over $7 million. They also added a significant asset of over $10 million related to tax credits. This growth in the company's equity is reflected in their earnings per unit. In 2025, it was a strong $3,435.75 per unit, a huge jump from $1,286.27 in 2024. This shows that the value of each unit has increased significantly. However, they also paid out distributions. In 2025, they distributed $1,700 per unit, down from $3,400 per unit in 2024. This is a strategic move likely to retain more cash within the company given the improved profitability and tax credit benefits. A key aspect of Highwater Ethanol's business is their reliance on third-party marketers, particularly RPMG. They have exclusive marketing agreements for ethanol, distillers' grains, and corn oil. This is a double-edged sword. It provides access to markets but also creates dependence on RPMG's performance. Any issues with RPMG could significantly impact Highwater's revenues. The ethanol industry is also heavily regulated. Environmental laws, the renewable fuel standard, and potential changes in government incentives all pose significant risks. For instance, the report mentions how the EPA's small refinery exemptions in the past significantly reduced ethanol demand and impacted prices. And then there is competition. Highwater Ethanol operates in a crowded market with many larger, better funded competitors. They compete not only with other ethanol producers, but also with producers of alternative fuels, and even the growing popularity of electric vehicles, which could reduce overall demand for gasoline and thus ethanol. So, what is my take on Highwater Ethanol's financial health? They've had a remarkable turnaround in profitability for 2025, largely driven by lower production costs and a significant boost from federal tax credits. Their reliance on corn and natural gas prices remains a major risk, but their use of hedging contracts seems to mitigate some of that exposure. The dependence on RPMG is also a point of concern, but their own operational improvements and the growing demand for corn oil and the potential from clean fuel credits look like significant opportunities. Overall, Highwater Ethanol appears to be navigating a tough industry with improved financial performance and a strategic approach to managing risks and opportunities. They've capitalized on government incentives and managed their costs effectively, leading to a much stronger net income. The key will be to see if they can sustain this level of profitability amidst market volatility and regulatory changes. Alright, that is our breakdown of Highwater Ethanol's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.